So, Ashutosh ji, we are just waiting for a few minutes for people to join, and I think thereafter we will, in a minute or so, we will start. Hmm?
Good afternoon, Sameer ji. Are you audible?
Good afternoon. Good afternoon. Yes, yes. So we are waiting for just few people to more to join, and then we'll start in some 1 or 2 minutes.
Sounds good.
Yes.
Are we live or we'll go live after you say so?
No, no, it is already live, I think. So because so they are testing it, so it's okay. Yeah. So I think now people are joining in fast, so we can start so that hmm? So uh, the team can unshare the screen so we can start it. Hello, everybody. A warm welcome and a very good afternoon. Today we are having a session on fund regime in Gift City, IFSC, and with a specific emphasis on opportunities for family offices. We also welcome our esteemed speaker who are from the regulator's office, Mr. Ashutosh Sharma, who is DGM in IFSCA, and Mr. Mihir Upadhyay, who is, sorry, I apologize, Mr. Ashutosh Sharma, who is General Manager with IFSCA, and Mr. Mihir Upadhyay, who is DGM with IFSCA. So I'll elaborate more about the speakers later on. So, dear participants, this webinar is, we are thankful for our speakers to be here and who have taken out such a precious time to be part of this webinar and give informative information to the participants. And I'm sure the participants are uh, want to hear from the officials of the regulator, from officials of the regulator, what is the real things, how the things are happening, so that it creates a good awareness among the participants. So this webinar is presented by India JURIS, which is a corporate law firm of existence in now more than 25 years. Fund setup and legal advisory are one of our practice of area. So in this webinar, we are going to cover primarily a fund regime at Gift City with a specific mention on how opportunities for the family offices. And thereafter, we will be inviting Q&A. The participants are welcome to put their questions in the chat boxes and we will put it to our esteemed speakers. So friends, for the knowledge of our speakers, I would just tell you the audience. So we have audience around from 25 locations from India and 5 countries abroad, from London, from US, and some registrations are there and people are attending. Some family offices, global family offices, people are there. From India, family offices there are there. There are consultants of the family offices who are representing them. So we have a mix of good audience who just really want to know the subject and be aware of this. So I would first like to invite our first speaker, Mr. Ashutosh Sharma, who is General Manager with IFSCA. Mr. Ashutosh Sharma is an accomplished banker with more than 18 years of professional experience. He has worked in financial industry across multiple global financial centers, and he has gained experience across international banking strategy, institutional banking, capital market, and transactional banking, etc. At IFSCA, Mr. Ashutosh works closely with the industry and partners to develop and promote GIFT IFSC as a regional and global financial center. At IFSCA, he has actively contributed to various regulations and is so leading the strategic initiatives such as global in-house centers, aircraft leasing, etc. So we would be having shortly, maybe after some time, a webinar on aircraft leasing also, so that we'll again invite our speakers. Mr. Ashutosh Sharma holds postgraduate degree in management studies from Indian School of Business. Everybody knows ISB. It's a very prestigious institute from Hyderabad, and dual specialization in finance and strategy. He also holds a bachelor in electrical engineering from Delhi College of Engineering. So I believe with such a decorated speaker with us who has extreme knowledge, and we would be very thankful, Mr. Ashutosh. It's all over you. Please give your presentation for the benefit of our audience. Thank you.
Thanks, Sameer. Thanks to the JURIS for organizing this webinar. Will request my team to share the presentation, please. You can go to slide view, please. Thank you. So the way we have divided the presentation today is in two parts. We have our esteemed colleague, Mr. Mihir, who has been the regulator, and certainly you will do the introduction from Mihir, but he is very well known in the fund industry. Being from the industry and now the regulatory regime, we have divided this presentation in two parts. First part will be more about IFSC as a jurisdiction and what development we are seeing in this jurisdiction. And second part will be onto the regulatory part of it, and both for the funds as well as from the family office perspective, which we'll hand over to Mihir. So quickly going on with IFSCA, please go ahead. So for audience which are probably listening or going into IFSC for the first time, GIFT City is a global financial and IT hub developed in India. It is India's first fully operational smart city. It's a greenfield smart city with gold and platinum rated infrastructure across the city. But please, the way GIFT City is divided is based in Gujarat, next to Ahmedabad and Gandhinagar. And it has two parts. One is domestic tariff area, which is like any other part in domestic. Other is special economic zone. India has many economic zones, special economic zones, but the specialty of a special economic zone in GIFT IFSC is that it is the first multi-services special economic zone focused on the service industry. Within this, IFSC, or India's International Financial Service Center, has been established by Government of India with ambition of bringing out a global financial center from India. Go ahead, please. I think when Indian government was thinking about putting up IFSC in India, one of the key agendas also, like India is developing and aiming for a $5 trillion economy in near future. And a country of India's size and scale, with the growth opportunity India has, India needs to have a global financial center. With that ambition, GIFT IFSC was established. Quick highlight on where we stand and what is the basic nature of entities in GIFT IFSC. Global Financial Center Index, London, which comes out with the listing or ranking of the global financial centers in March 2022, has put GIFT IFSC as the top among the 15 global financial centers coming up globally. The entities which are establishing GIFT IFSC, these are non-resident from FEMA perspective. What it means is that they don't have any capital account restriction. So the movement of capital from offshore to IFSC and IFSC to offshore, it's free from capital account restrictions. It's free movement of capital. Whereas the movement of funds from IFSC into India, it will be guided by RBI regulations as applicable, FEMA or ODI and LRS, depending on which side of investment you're looking at. Go ahead, please. All the entities in GIFT IFSC, well, we have not deep dive into this tax structure here, but at a high level, the entities which are establishing in GIFT IFSC, they get 100% exemption on the tax on the business income for a block of 10 years out of 15 years. The minimum alternate tax also is lower at 9% compared to an domestic side. However, this can be brought down to zero if the entities are opting for the new tax regime. And if they're raising funds in the FSC exchanges, the withholding tax on these funds is also relatively less. Beyond that, for each and every vertical, for example, like AIFs for aircraft leasing, Government of India and IFSC has been working to provide a bespoke but very competitive tax regime, and we'll talk about it later. Apart from that, Government of Gujarat, the state government, provides a significant amount of subsidies, be it on power, electric, water, and probably provident fund and all payments to the employees of the entities establishing in IFSC. And these benefits extend to all the entities establishing in IFSC. Go ahead, please. Well, we spoke so far about the GIFT City and GIFT IFSC, briefly touching upon IFSCA, and both Mihirji and myself, we are from IFSCA, which is International Financial Service Centers Authority. It is established as a unified financial regulator, first unified financial regulator in India, which has a unified powers of 4 sectoral regulator, RBI, SEBI, IRDA, and PFRDA. The authority mandate is both to develop and regulate the financial institution in GIFT IFSC. So the approach of IFSCA has been quite industry oriented. We are quite proactive, listening to the industry, taking the feedback loop, coming out with the regulatory enablers and other enablers going beyond the regulatory, because our agenda is to develop the ecosystem apart from regulations. Go ahead, please. A brief snapshot on the journey. While GIFT IFSC came into being in 2015, 2020 is when IFSCA, October 2020, took over the power as a unified financial regulator. So GIFT IFSC is around 6 to 7 year old. However, IFSC has been around for last 18 to 20 months. And since then, IFSC has issued 20 plus regulations and registered more than 200 entities. Right, please. Well, when we say that it's a global financial center, what it means is that we are looking at GIFT IFSC as a financial center which is providing holistic solutions, which has all the core pillars of a financial sector as well as ancillary and related industry and beyond that. So among the core industry, you have the banks, Indian banks, foreign banks, you have capital market, stock exchanges, clearing corporation, depository, and all these are operational as we speak. You have asset management industry, you have AIFs, and advisors, PMS, advisors, portfolio managers, family offices, insurance. We have both the insurers, the reinsurers, brokers, dealers. We have financial institutions, equivalent of finance company in offshore jurisdiction or NBFCs in India, which can do everything that a bank can do, except that they cannot take the deposits in IFSC. We have treasury centers coming up here from the global MNCs. In the emerging activities, we have a fintech hub, and this is a significant focus of IFSC is toward developing IFSC as a global fintech hub, and we'll talk briefly about it. We have global in-house centers, which is like we have the likes of Bank of America, which is employing more than 2,600 people as we speak in IFSC. Aircraft leasing, financing, bullion exchange, which is going to be inaugurated on July 15th. Go ahead, please. Well, this is just a snapshot of regulatory architecture in GIFT IFSC. So IFSC has brought out regulations, both banking for global in-house, fintech, aircraft leasing, fund management regulations, which is most relevant for today's discussion, are the recent one, and we will be speaking about it briefly. Go ahead. On the business highlights, we have stock exchanges, as you mentioned, both NSE and BSE, which are domestic exchanges. They have international exchanges established in IFSC. These exchanges are today taking a daily volume in the range of around 10.8 to $11 billion. We came out with fund regime a few months back. And in this fund regime, we have seen interest from more than 30 funds, which have already committed more than $6.3 billion. We have banking asset size, which has grown significantly by more than 2.5x in last 18 months, hovering around $32 billion today. Cumulative banking transactions has been more than $200 billion, and derivative transactions have taken off significantly, which was nil earlier, is now $275 billion. GIFT IFSC today employs more than 5,000 employees and has more than 300 institutions or companies established in IFSC. Just a layout of the banking ecosystem, because they form the core pillar of any financial center. We already have 14 Indian banks, including all the leading private and public banks. We have 8 foreign banks, including likes of HSBC, Standard Chartered, JP Morgan, MUFG. MUFG, JP Morgan, and Deutsche Bank will be doing the inauguration, will be going live with their branches this month and next. Other foreign banks which are lined up in near future are the likes of Mizuho, SMBC, BNP Paribas, Credit Agricole. And there are several other foreign banks with whom we are engaging. This gives the depth and breadth of to any financial center. In Global In-House Center, as we mentioned, we already have Bank of America, which has scaled up its operation to more than 2,600 employees. In the capital markets, we came out with capital market regulations here, and this capital market regulations allows listing of debt securities, listing of environmental, social, and governance enabled debt securities, a listing of deposited receipts, and deposited receipts has been significant enabler for innovations, as you can see to the left top, where retail Indian investors are now provided with the opportunity to trade in select US stocks on NSE FSC platform via unsponsored depository receipts. What it means, it's in a fraction in the tokenization form, US stocks can be invested in by the retail investors. Okay. And the fund industry, we have, as you mentioned, that we have seen a significant interest once we came out with our fund regulations, and we have seen interest across venture capital fund, private equity funds, hedge funds, the likes of DSP, Avance, Kedara, Avendus, Bloom Ventures, the finance companies like Vivriti, they are coming here with the debt funds, True North from Zerodha. So we are seeing interest both from the Indian fund manager as well as offshore fund managers across the class. Go ahead, please. We briefly touched about the FinTech Hub, and FinTech Hub, while IFSC is becoming a hub of FinTech for India. India already has many FinTech centers, be it Bangalore, be it NCR, Mumbai. But IFSC has been chosen as a FinTech hub for India, and India's flagship FinTech event is going to be held annually in IFSC. It's branded as Infinity Forum. It was organized in December last year. We have IFSC is the only regulator which has come out with a FinTech entity framework. This is first of its kind globally, which under this framework, we have enabled both the FinTechs and TechFins to enter into IFSC as FinTech entity. Beyond that, we have also recognized accelerators as the FinTech entities. And also, IFSC is also the first regulator in India to come out with a FinTech incentive scheme. It's kind of a grant scheme for starters for the FinTechs to establish in IFSC. While for development of any global financial center, we require the core pillar. But if you see any financial center worth its weight, you will see that the core requirement for any industry to come in is that its ancillary industry has to come there, be it the legal system, be it the fund administrator, be it the trustee service, consulting service, accounting service. This is again a core area of focus for IFSCA. We intend to make IFSC the regional hub for specialist professional service providers, which we have recognized under the ancillary framework. We have leading consulting companies already establishing their presence in IFSC, leading accounting service, leading legal services, be it CAM, be it Nishit Desai, have established their offices in IFSC. So this professional services network, which is required for success of any industry, including fund industry or family offices, it is currently operational and supporting the industry here. But please. We can go to next, please. Briefly touching upon on the family offices, and as we see and why we are discussing family offices today, while core focus when we started working was on the fund industry, and certainly fund industry, India as an economy as it's trying to grow, aiming at $5 trillion, the kind of investment that India needs, it requires significant infusion of offshore capital, and hence fund industry is a logical core industry for IFSC to target, and there's a significant opportunity there. At the same time, we are seeing trends in the family offices globally, and we think that this is an area where IFSCA can contribute towards the need of the industry. When we look at the trends, broad trends, and family offices, as we see, they are but private wealth management advisory firms, which comes in different shapes and sizes, but effectively they manage the wealth, investment, at times the family governance, philanthropy interest, luxury assets, and different kind of interest of any affluent family. We have seen that family offices are coming in different, again, single family office, multi-family, there are different forms and formats in which they are coming out. But there is 8.6 trillion of intergeneration wealth that will be transferred in next 7 to 8 years. And that's a global number, but significant amount numbers. And we'll talk about the significance of this number shortly. But when you connect it with the fact that Asia is now home to quarter of world's 2,700 plus billionaires, and it is expected in the next 3 years, Asia will be home to 1/3 of world's billionaires. And then if you see that compared to North America and other Europe and other centers, family office space has to yet to take fully off in Asia Pacific and emerging markets. 1 or 2 countries in Asia, they have seen this family offices taking off, but still the industry is maturing. Foreign capital that have come into India, it is leading to opening up of this market. Can you go to next slide, please? Again, coming back to trends, globally, there are around 6,000 to 10,000 family offices, which are managing $8 trillion in assets. This, in fact, is larger than the entire global hedge fund industry. If you think in India, India has only 150 to 200 family offices. But apart from these family offices in India, India has a huge pool of ultra high net worth individuals. Beyond that, we have a large number of ultra high net worth individuals, which are part of Indian diaspora. It's spread globally. India is likely to have 150 unicorns by 2025 and about 10,000 ultra high net worth individuals with cumulative wealth of $700 billion by 2024. Well, all these, if you think, and then if you see that new age business owners which are in India, they are starting to cashing out. They're finding the exit, whether it's through IPO or other means. What it means that they need to manage their investments. So the family office trend in India is going to grow, and that is certainly a need not only for Indians in India, but Indians offshore, as well as investors and the family offices outside India. What they are concerned about, they're concerned about complexity of regulatory issues. They're concerned about the tax complexity, lack of clarity on tax. What IFSC provides, we provide clarity on the regulations, a very clear black and white taxation regime for funds, including for family offices, and a stable ecosystem for family offices. You can go to next. We have seen that family offices have of late been very active in the private equity markets, a market which has grown in last half a decade in India significantly. They are orienting towards the sustainable investing, climate change, impact investing are there among leading priorities. And why we are talking about these topics is because these are all intertwining with what IFSCA stands for. Among one of the core pillars that IFSCA is driving today, we are saying that we want to be the hub of sustainable investing in the region, and we are working towards it. We want to be the hub for cutting edge technology for India or for globe. We are probably one of the leading regulator which is working on ideas like longevity finance. Some of these things are very relevant for these family offices. One of the, again, agenda that came out during the discussion is that the work allocation in this family offices, 70% conduct asset allocation, risk management, accounting, reporting, etc. in-house. All these are effectively building into the cost structures. What IFSC provides, it provides you a stable regulatory regime, competitive economics, hinterland opportunities, and a cost advantage. With this, I will just conclude, give it back to Mr. Sameer. Please, next slide.
Thank you, Mr. Ashutosh. Wonderful overview about the fund regime at IFSC. And I think the participants over here and the people who are associated with family offices who are involved in this business would definitely have an insight, would definitely have food for thought. They would definitely think about it, how they can be benefited, what are the possibilities available in India. We are getting equal to like any international uh, global fund jurisdiction. And I think you mentioned about the fintech. We would be the first who is developing a fintech hub, which is a very useful information for us. And the event which you told, which happens every year, I think in December, the people who are here would like to follow that particular event when it happens again. And fintech regulations which have come out, definitely recently they have come out. I think they are definitely paving the way for fintech sector in Gift City, and being a financial hub, they would definitely get benefited out of it. So I think we have a question. So we have few questions. I will take one or two questions, and then we can invite Mr. Mihir, and then we'll have just for the audience who are there. I'll take one question, and then we'll take rest questions after Mr. Mihir's particular thing. So I think one of the gentlemen, I'll take the first one, that let's say PMS is registered with SEBI, and now they want to, now they are planning to launch an AIF at IFSC. In terms of Regulation 5 of IFSC, need to understand whether the entity on launch an AIF through opening a branch in IFSC, or since it's first AIF, they need to open a separate entity. So what I understand that they already have in mainland, and whether they would like to separate a separate entity or they can open a branch. I think the regulations are very clear, but I would like you to explain to this to the gentleman.
Sure. The question is for you. Yeah.
Yeah, sure. So in this particular case, even if they have a PMS license which is registered with SEBI, they can come up in a branch structure and they can form an AIF. It's not necessary that they need to have an AIF, then only they can come over here. So even by having a PMS, they can very well come over here and establish a AIF by coming in a branch of a PMS entity.
So they are free to set up a new, or as a branch, it's their choice. So both things are available.
Yes, yes.
So I think we'll take few questions later on. We have more. So friends, now we have our another very esteemed speaker and very knowledgeable, and we have interacted with him earlier as well. So now I would like to invite Mr. Mihir Upadhyay. He looks after the investment fund alternative department at International Financial Service Center, IFSCA. He has over 18 years of experience in investment, regulatory organization and consulting firms. Before at IFSCA, he was Chief Investment Officer at NB Ventures, a VC firm based in UAE. Prior to that, Mr. Mihir Upadhyay has worked with Pension Fund Regulatory and Development Authority of India, PFRDA, Brand Capital, ICRA Management Consulting Services, and JP Morgan. Mr. Mihir Upadhyay has an MBA from Wellington Institute of Management Development and Research and BCom from University of Mumbai. So I think again, we are having such a delightful and experienced speaker with us, and we are definitely enjoying your deliberation. So Mr. Mihir, over to you, please.
Thank you, Sameer, and thank you, India Jury, for hosting this webinar for us. It is a good way to reach out to people and give more clarity. So thank you for this. Continuing from where my colleague Mr. Ashutosh has left, so he has built a base for me to now go and give a glimpse of what we plan to do and what we have already made available through our set of regulations which are out. So just to give you a brief snapshot about the regulations which are published in April 2022. So what we do is that in terms of the fund regime, which earlier everybody is familiar with the SEBI regime, but since it's an international finance center, And we benchmark ourselves with the globally established regimes which are there available in Singapore, Ireland, Hong Kong. So based on that, we came out with our own set of regime on the fund side of it. And as we move away, we start regulating the fund manager. We start on a lighter way, we'll start we'll be regulating the investment funds which are there, which they come out with. So there are three sets of entities the fund managers can come over here and set up their entities. One is the authorized one, which is a very light touch regime. Second is the registered non-retail. Third is registered retail, which is more close to a retail fund. And registered non-retail is something which is people are more familiar with, people who are having a private equity or venture capital fund. Those kind of investment managers, they come under that category. And all the three regimes allow you to float a VC fund, a restricted scheme, which is a private equity venture capital fund, or a retail scheme, which is a mutual fund scheme. Along with that, there is also provision if somebody wants to do a REIT InvITs, both public and private, that can be done from this place. The PMS regime is very much there over here, which can cater to the global requirements of the people. And largely, what we are talking today is a very new concept, which is a family office regime, which we want to bring, targeting towards both domestic as well as the foreign individuals, be it in India or anywhere in the world. We want this IFSC to be the place where they can come and set up their family office, single family office over here. There are other innovations in the regulations which you have mentioned is setting up of fund labs. So if somebody wants to try out certain strategies in a controlled environment with their own set of money, they can very well do that by coming into the fund labs. There would be an SPV structure which will enable the funds over here to do co-investment leverage in a much better fashion. And the third is the private public participants in the private market. So here we want to give retail a flavor of what can be done by investing in a pre-IPO kind of a thing. So they can also participate in the growth of the startups, which we've been seeing in last couple of years, the phenomenal unicorns coming out of India. ESG, ETF, stress assets are the emerging areas, which also the regulation speaks about that. And to support the entire ecosystem, we would have a definition of accredited investors for our regime, where we say who becomes an accredited investor by virtue of their size and how they can be registered either by funds themselves or by virtue of a centralized agency. The role of a distributor, because it is a paramount thing which helps the funds to be marketed. And lastly, a long-term vision has to develop a passporting regime. So a fund manager here can go and market their product in, say, UK or in other parts of the world, whereas their funds can come and be marketed over here. Next slide, please. So just to go in further details, how the three set of entities which are there over here. So we have an authorized as FME, which is a very light framework where a person or the firm can set up a VC fund or a single family office. Second is a registered non-retail category. This is very much close to the current AIF regime, which people are used to or familiar with in India, and usage and all, which would be there in Europe and that side of it. Here you can do a restricted scheme. When I say restricted scheme, is not open to public. It is more of the private placement side of it. So these are the funds which will be managing the late stage private equity or the late stage venture capital and that side of it. And the last one is the registered one, which is highly regulated, or when I say, means you have more oversight, because responsibility of retail investor is something which all the regulators in the world look forward to. So this is where you have very high oversight, which is there. Retail schemes forms part of this. ETFs and REITs and InvITs, which are public in nature, comes a part of this regime. Next slide, please. Very brief touch base on the taxation regime. We won't be going very deep into it, but the category 1 and category 2 AIF do have a pass-through regime over here. A category 3 regime has a fund level taxation over here, and the manager and the sponsor entity, as Ashutosh mentioned in the earlier slide, they have 100% tax exempt for 10 out of the 15 years block, which they can do. Similarly, MAT is at 9% and all. We can move to the next slide. So now we go deep into what the family office and single family office mean. So here you won't have a distinction between the family office, that is the investment manager, and the fund. It would be one and the same. It would be a vehicle at the end of that which gets set up, which will be called as the family investment fund. The eligible conditions for this vehicle is means we have allowed a provision to be in the form of a trust, a limited liability partnership, or it can be in the form of a company, whichever suits the family and their requirement. They can come and they're set up in that form in the terms of the legal structure. What we envisage as a family investment fund, when it is registered with us, they'll have a time frame of 3 years to have asset under management of close to $10 million. So that is what the family has to keep in mind, when that they will have a 3-year period to bring that kind of an asset under management. And they should have one investment professional over here who would be the licensing officer, and at least he would be able to take care of the entire fund side of it, because we emphasize that family will not be shifting over here. Family can be at any place in the globe, and but there would be some person who would be always there to take care of the entire functioning of the office, which is there. And it has been very paramount. Since this regime is only meant for a family and the family members, it is only meant for them. So there cannot be any third party money which can be brought into this fund. It is only meant for their specific needs, for their specific purpose, and exclusive control by the family members for the functioning, how it is moving and all. The investment professional will be more of giving them a direction as to how to do it, more on the implementation side of it. Next, please. So I already covered that it will be meant only for managing their own funds and not any public money. The tenure, since we know this is going to be a legacy fund where a family plans to keep all the assets together, and how it would be going. So it can be an open-ended, close-ended fund depending on the need of the family as to how they want to do it. Because there might be an instance that today some family office is already set up at some other place. They want to try and set up over here because they would be looking at investing in India or allied jurisdictions which are close in Southeast Asia side of it. And they want to create a sub family office today, and they want to try that out. So they can do it. So based on the requirement, they can come out with a structure, whether be it open-ended or close-ended. We have given, since family, they come out with various forms of investment they do. So we have not restricted only in doing them investment in equity and equity related products, but even the hard assets like real estate, gold, art, wine. We just imagine, and that can be part of the investment which they can do from this particular fund, and they would be able to do it. But the thing is that we allow it where the jurisdiction where they are going to invest, you have to be mindful of that, what is allowed and what is not allowed by them. So the example that investment in India in real estate for a non-NRI or for a foreign national, there might be some restriction. So that is mindful, that is not in part of the regime which we can propose for that. And lastly, we know family offices does not like many of the compliances and all. So what we do is a very simple compliance regime. At the end of the year, they would be filing with us the constitution of the family. We just want to see if there's any change from the earlier constitution which they have filed. And also the source of money and what are the overall assets under management. Apart from that, we don't see the compliance regime is going to be very simple, and reporting is going to be very straightforward to it. So this is what we see when it comes to the framework of it. Next slide. Apart from the family office, the other things which are very much there, so I talk about the PMS over here, which people can do. The fund labs, I already mentioned that people, if they want to try out new strategies, new fund managers are there, or even old fund managers, they want to build a track record. Suppose somebody is looking to invest outside India and build a track record of their strategy, or see if their strategy is working in the global market, they can come in the fund labs and can do it. Special purpose vehicle will be used by the funds for their co-investment and leverage purposes. ESG, ETF and stress assets, you will see more coming up in the few days, some more guidelines of that. Next one. So this is a pictorial side of how the fund operates, but family investment fund itself is a fund, a vehicle at the end of the day, and it won't have the top side of it, which is the foreign investor and Indian investor. It would be only an AIF where the money of the family would be there. There won't be any investment manager per se for it. They themselves it's a self-managed fund at the end of the day. They would be able to invest in any securities which are there in IFSC, or any securities which is in global, which are available. They would be able to invest in India into any unlisted securities which are there, and any other permissible securities which are available anywhere. So that is how today we have seen that there won't be any restriction where they can invest and where they cannot invest. Family office would be free to take their own call. They would be free to take leverage the way they want and how much the bank can provide them. So that is how it's going to be. We want to give them the entire flexibility as to how they can plan their asset allocation, how they can plan their investment, their future inheritance structure they want to do. Next, please. And finally, just a brief as to if they are setting up a family office over here, the requirement was to identify an office space, take the approval from the development commissioner. They can file the offer document, or I would say our application form to us along simultaneously when they're going to the development commissioner for setting up the unit, and finally getting approval from both the entities, and they can commence their investment from IFSC. That's it from my side. We are more than happy to answer the questions. Thank you so much.
Thank you, Mr. Mihir. It is indeed insight into the family office and the kind of regulations have come out, and you have given a prospect some information and things for the participants to understand. I think the questions which are coming on family office from the people are related to the same thing what you have told, but would like you to elaborate in a more simple language. So there are few things which I would like to ask you, which is there, like when you are setting up a family office, do the family office would require to set up an FME, maybe authorized FME, or they can simply go and have a like AIF kind of, they can themselves be the sponsor and then they can do it, or they need to put an FME first and then they can, yeah.
So, Sameerji, as I mentioned, though it comes under the authorized FME, but it would be simply forming, let's say, a trust or an LLP or a company, and giving that chartered document to us, who are the family members, and that is very clearly identified, and what is the source of money which they are bringing. So, apart from that, they don't need to actually file in any PPM or nothing, because it's at the end of the day, their own money. So, it would be only a vehicle which would be formed, but still they will get the authorization under the authorized FME. That is how it would be counted.
Okay. So there's one more thing you mentioned in the regulations regarding $10 million corpus is required, or they have to maintain it over certain. Can you just elaborate what you mean by corpus and how they have to maintain about it, or they have to bring it at one time, or how it is?
They would be given time frame of 3 years to bring in that kind of a money. So when we say it would be an investment or an AUM under management, that will be how it would be counted over a period of time. So they can start up, let's say, $1 million to begin with, and over a 3-year period, they can move from 1 million to 10 million number.
So in a family office, so there would be certain more questions. I would take what the people have asked, and we have some other questions also which have already come into us. Like for a family office, we can say the regulations say that they have to be from the single linear descendant of the family has to be there. So can you just explain on it? And like, for example, if there's a family and people are residing globally, some in different countries, and they want to set up, so how would you see the lineal descendants on that particular?
So Sameerji, thank you for asking this. We will have to come out with a circular on this where we define, give you a proper definition of what becomes a family member. So that would give a lot of clarity. I guess that is not part of the regulation. So circular you will see in say a couple of weeks, giving you a clarity on what becomes the definition of a family is, which is today not covered in the regulation.
Yeah. So I think at the moment,
globally, that's perfectly fine, as long as they fit into that particular definition of the family. A family office, they can be part of as a family member, part of the fund.
So all they can pull in and set up a family office over
Yes.
in the IFSC and it would work.
Yes.
Okay. So I'll take a questions over here who have come in and then I'll take more from. So will India-based high net worth families allowed to open family office in GIFT to manage their overseas investment?
Yes, this is specifically meant for that. Because if it's an India-based family, getting money over here and again investing back in India is not going to be possible for it. This is meant for their overseas investment, be it real estate, be it equity investment, be it listed equities, whatever they do, they would be able to do that from this place.
So they can set up a family office in GIFT, though they can stay in India anywhere. From there, they can manage it and
Yes.
they can invest anywhere in the world wherever they want to.
Yes,
So
except for
instead,
India. If the
yeah,
money is
except
coming from India, yes.
so it is just like if somebody wants to set up a fund in Singapore, Mauritius, or any other global jurisdiction, it's better to put it in GIFT IFSC. You have a lot of relaxation, lot of convenience, I would say, lot of convenience, and you can get the same benefit, same thing as you are doing it globally.
Yes,
So I
very
think this answer, yeah. So I think this answer.
So Sameer, if I may add here, when Indian residents will be taking capital outside, they will be taking it outside under the FEMA regulations, be it LRS, be it ODI guidelines. And to the
Yes.
extent that it allows, if they can set up a family office in Singapore, Hong Kong, Dubai, any other places, they can pretty much set up the same office in GIFT IFSC as well at much lower cost.
So I think there is one more benefit for the family offices who are making investment individually in different deals. They do the whole thing documentation one time, and then thereafter they can do n number of transactions globally, and they don't need any further things over there, I think. So
once you have a set of money which is there collected over here, from here it can happen just like how a fund can do. That way it would be functioning.
So there is another question. If an Indian AMC mutual fund is setting up a non-retail fund AIF in GIFT City, does 2025 rule apply to them? Also, are there diversification norms applicable if the purpose of fund is only to invest in units of foreign funds?
So I guess since there are two parts to this particular question, 2025 rule is applicable. This is what we have been told by SEBI, because at the end of the day, AMC is governed by SEBI, so they would be giving NOC to that extent. And second, since it is an AIF does not have any particular restriction as to where they're investing. So once a fund is formed over here, it can go and invest as per what they've mentioned in their PPN. And within the guidelines where we have given where it can be invested, there are a set of investments, 10 to 15 are mentioned in our regulation. Since it should be within those side of it.
So there is a question: are there any restricted sectors where the investment can be made, or is there any restrictive sectors which have been provided that in being in GIFT City you can't or you can over there, something like that?
As such, if this is related to the family office or to the funds?
So it is, I think it is generally they have written there is no, it has nothing added. So maybe it is related to funds. Yes, just put the message. It is related to funds.
So we have, as such, for the funds also, as I mentioned, we have given what can be the investment avenue, but it's a very exhaustive list where the investment can be done. So as such, we don't see and there are any sectors which would be doing, but at the end of the day, where the money is getting channelized, suppose if the money is collected over here and it's going in India, it would be in the form of an FDI, if it is an unlisted space, or an FECI. So whatever cap which would be there based on that would be applicable. Otherwise, from our side, there is no such restrictions which are there.
Okay. So I think there is one question: if a domestic investment manager or AIF has to set up AIF in GIFT, then do they need to take prior approval of SEBI in order to comply with the Regulation 7 of FEMA? The Regulation 7 makes it mandatory to take prior approval of SEBI.
So for setting up, I don't think so the approval is needed. But if it is you are applying it to SEBI, you have to go them for the capitalization at any point in time. You will have to take an NOC from SEBI and you need to do it. So if it is a, let's say, private equity or venture capital player today who is there in India and who wants to come and set up shop, he can do it very well before approaching SEBI for NOC. But if it is going to be, let's say, mutual fund house today, and if they want to do it, I guess they'll have to take a prior approval. So that is that side of it. Depending on what kind of entity it is, whether it is actually regulated by SEBI or not, it depends on whether a prior approval is required. For all the entities, if they are registered with SEBI in any form, at least during the time of capitalization, they would have to do it because the FEMA requires them to go to the sectoral regulator and take an NOC during that time.
So like in fund regime, we see that there is a requirement of FME contribution. So here, is there any, like we have maybe 4 or 5 people, is there any kind of minimum contribution kind of concept is there or something like that in this particular setup of FIF or something like that? If you have.
Savi, I'm not able to get your question, but if an FME is there over here, there is a requirement for a net worth at the end of the day. So net worth would be required to brought in at the time once you get the approval, and you will have a lean time to get the net worth into the fund if you're forming as a subsidiary. If it is it is coming in the form of a branch, it can be shown at the parent level. Earmarked amount has to be shown. When you are having a fund over here, you do have a sponsor requirement. There are exemptions to the sponsor requirements which are there, which maybe accredited investors are there, or it's just a feeder fund. And if you have any underlying domestic fund where you're already having that 2.5% or 5% requirement, then that you can avail the exemptions from the sponsor contribution. Otherwise, you have the sponsor contribution requirement in GIFT IFSC fund.
So one more question: if you have a family investment fund over there, so is there any requirement for the sponsor? There may be a sponsor, so is there any requirement for the location of the sponsor where the sponsor is required, or he can be anywhere or something like that?
Sponsor can be anywhere because the entire fund, when we see a single family office, is going to be their own money. So entire 100% fund is going to be owned by them. So there is no sponsor requirement because everything is themselves. So family can be based from anywhere. They need to have an office and they need to have a person who will be managing that affair. That's it.
So that I think people are asking, but one thing is, I think you mentioned that family offices from India, if they want to again invest in India, that there is no point in making fund over there. I mean, legally also it would not be possible.
Legally, it is not possible today to do that.
So, for example, if there is a family office, some people are residing in India and they have set up it there, and then their foreign counterparts or their family members are putting money. So whether the family in India is allowed to spend money in setting up and all those things, or how it is?
So I would say, because you will have a complexity of having NR and non-NR together in this, that will create a problem. It is always better to have only a very clear demarcation of having, let's say, if it's going to be an Indian family resident, let them set up their own office. If it is going to be a non-resident, let them set up their own office. You should not have commingling of money, then it will create a lot of issues. Not for us, but at least the domestic investors and domestic regulators might have some issues with going that, because then the color of money and changing, that is going to be an issue for us.
So I think one of the biggest issue for the family offices residing globally and the maybe non-residents or the foreigners who are selecting this jurisdiction, that what kind of KYC they have to put into the regulator. So is there any specific kind of KYC is required to be put in, or it is a standard like all jurisdictions where they have to give, or there is something additional would be required here?
So on a broad principle level, what we look at is where is the source of money that is there, paramount, who is the final beneficiary owner. As long as we are able to identify that and we are able to identify all the family members, which they will be providing us with the details, that should be sufficing, because then we'll know who is the person, where is they residing and all. And this information, any which will be requiring from even from our AML CFT perspective as well.
While having said that, I think IFSC is also going to come out with its own KYC framework, which is work in progress. Once it comes out, it will apply to all the verticals. But this is a globally benchmarked KYC regime that will come out, which will be focused on simplification and at the same ensuring that it is complied with FATF and other guidelines.
So one is standard question asked by most of the people, that how much would be the estimated timeline if they start today? So how much would be the estimated timeline they would be able to start their operations over there? I mean, just a vague, just a broad estimate.
So Sameer, normally what we have seen is that approval from our side, registration comes much faster than that time entities start thinking about and making preparation for the documents. So that is a short answer to it. Means you can always check with the funds which are already registered with us. The timelines would be provided by them, and I guess none of them have any complaints to that.
But typically, I think two approval routes there, right? One is IFSC approval, another is SEZ approval. And typically, after the application is made, the approval is quite fast. But before the application, I think only thing they need to identify the office space, they have to get the provisional letter of allotment. All these things add to the time, which could be depending on the efficiency of the fund managers, as Mihir was saying. If they can close it in time, then I think it's around 4 to 6 weeks. If everything goes smoothly, once they apply, I think 4 to 6 weeks from that time, maybe faster than that, is the experience.
I think this SEZ and IFSC, both approval can be done simultaneously also.
Yes.
Yes.
So both things can be done simultaneously so that we can save a little time on it.
Yeah, only thing is that we'll still wait for the SEZ approval for that to come, though everything can be kept ready for at our end. Only thing is that once we know SEZ approval is come, we can issue the certificate of registration.
So the people who are approaching us to advise on this, so I tell them, you keep your things ready. वहां से देर नहीं होने वाला है. तुम अपनी चीज को तैयार रखो. So that is this I want to tell everybody. There are few more things over here. Like once I am liquidating my fund, for example, at the time of closure or liquidation of the fund. So how easy it is to take back the money, or what are the remittance required, or is there any complexity, or just I close it and take my money back?
I guess the closure of the fund is very much elaborated in the regulation itself. And since the entire money for here, everything is dollar denominated. So there is no thing. So as long as they are able to wind up their investment and get the money back into the bank account, they will be able to simply.
I'm asking from the practical aspect of it. I mean, because generally people want to know how convenient it is to regulation. Obviously, every country would have certain things to comply with, but how convenient it would be to close and take it. So it is more from the convenience point of view.
There are two parts. One is funds, which Mihir is responding to. It depends on them and how and when they are able to wind it off. Second part is repatriation or taking of the money. As you mentioned, it's a capital account. Restriction don't apply in IFSC. They can take the funds back to the home jurisdiction outside India without any approval. They don't need any approval from any regulator. They don't have to take approval from banks and all. They just can send the remittance request and the funds will go out.
I think these things are very much which makes people attractive, or people want to listen these things, that how convenient and how easy it is to, because I met a lot of people outside India, still they don't know about India and how really things can work like this. So it is really to be informed to the people. There's one more question. Can you throw some light, like family offices in GIFT? Just a very, very broad comparison, because there are people over here who are just maybe in 2-3 minds that whether they should put it there. Maybe Ashutosh can throw some light on this. They were in 2 minds whether they should go to Mauritius or Singapore or any other place. So just a broad comparison or an advantages, not in quantitative, just qualitatively, how you would say that it would be convenient as compared to the other foreign jurisdictions.
One thing is convenience. I mean, I think when people are going to establish or choose a location where they have to invest, their office is a long-term commitment. and what they look for is a stable regime, and FATF compliant regime, a strong regulator. IFSC is providing you all those benefits at the same time. On the other end of it, what family offices, when they're setting up for the first time, or when they're setting up the satellite office of their offshore or parent family offices, then they're looking for is a cost structures. What they do is they do the accounting services, risk evaluation, and allocation, all these activities within the family offices. The salary component, all these components add up, in which GIFT IFSC against is very, very competitive. So if you sum it up, you think of a jurisdiction which is providing you a stable regulatory regime, very clear tax regime in black and white in a way, and you have a cost advantage compared to any global regime, and then you think that it is coming up in a next to a hinterland, which is showing you investment opportunities, be it on real estate, be it on equities, be it on private equities. And India is presenting you all those opportunities. South Asia is presenting you those opportunities. Asia is presenting you those opportunities. So I think if you look at holistically, this is the right jurisdictions if they have to sum it up. Mihir, will you like to add?
Ashutosh, you have very well covered, so I don't have much to add to this point.
Very nice. So I think there is one question more over here reflecting that people want to ask, that whether the provisions of mainland, when I say mainland GIFT is, so I'm rest of India, I'm referring as mainland. So the laws like PMLA, Prevention of Money Laundering Act, all those things, all those such kind of regulations or things are applicable in that place or not? I mean, there is some question, gentlemen asking.
Sure. So PMLA Act is a central act. It is applicable to India as well as it's applicable to IFSC. However, as I mentioned earlier, we are currently working on a KYC regime. Now in domestic, you have a KYC guidelines issued by the regulator, which is as per the PMLA Act. IFSC also is looking at the PMLA Act, but since it's an international financial center and it has its own unique nature of businesses and agenda, we are in discussion of bringing out a KYC regime in which we are seeking some of the exceptions under the PMLA Act, also with the ministries. These proposals have been sent out. We are working on this framework. I think once the framework comes out, then you will see that we have kept best interest of the businesses so that their experience when they're doing KYC, for example, in advanced jurisdictions, will be at par with what you will experience in GIFT IFSC. So don't look at PMLA Act, I will say, you wait for the KYC framework that IFSC is going to come out with. That will give you the right flavor.
Yes. I think a lot of people are messaging and asking for the presentation which you have just given, and people really want to know about GIFT and the developments happening. And I think we need to do more such webinars frequently. Maybe the topic may be the same, but every time because people are engaged somewhere, we have around 200 registrations, and I think people get busy somewhere and something. But so I think we can share the presentation with your permission when you send us, as you say, so the people who are there and who are asking for it and want to know, read about themselves. I think your website provides most of the information about it.
Yeah, we are okay with that.
Achha. So once we can share the presentation with the people who are asking for it. So they are putting their, I think most are the advisors and so family office consultants, so they can guide their people accordingly. So I think we had a good amount of question and answer session, and really it is interesting and knowledgeable for me also, though I have read regulations many times, but still when interacting in person, you come to know many things. And I think with this, I would thank, if we have any more questions from other side. I think we had a lot of questions. We have taken your lot of time on this, and but the answer which you have given are really informative, and we have been enriched with this information. And we try to do these more webinars like this for the better information for the audience. And thank you, Mr. Ashutosh, for being here, and thank you, Mr. Mihir Upadhyay, to be here with us. Thank you once again. Thank you all the participants, and we'll see you in the next webinar. Thank you very much.
Thank you.